Welcome back. You're tuned into Bazaar Morning Call. Well, we've just listed out all the stocks that you need to track. We've also given you a trade setup. Let's get in Ajay Bodke, who joins us to help us out with some fundamental analysis. Hi, Ajay. Morning, and thanks so much for joining in. Well, the top sector in focus is going to be the banks and the financial names. They're going to start off on the back foot. How do you approach these? Would any of them be on your buying list at a particular level?
Good morning, Nigel, and thank you for having me on the show. I think the much needed and long overdue measures announced by RBI is essentially because the governor's plea for banks and NBFCs to go slow on unsecured personal loan portfolio, which has seen very rapid growth vis-a-vis the other categories of loans, has fallen on deaf ears. And that's why the RBI was compelled to announce these measures. Now, my analysis of various banks and NBFCs indicates that there are four banks which you need to watch particularly. The first is Axis Bank, where I think the exposure of unsecured loans is roughly 25.7%. And my concerns essentially stem because of there's been rapid growth in unsecured loans for the last few quarters. Their share of NBFC loans is relatively high compared to the other banks, comparable banks, and they have relatively lower capital buffers. The second bank we need to keep watch is RBL, which of course is the most impacted because the exposure that it has for unsecured loans is at as high as 32%. Credit card exposure is quite high out there. And the risk weights will increase will impact it quite substantially. Kotak is another that you need to keep a watch because incrementally, if you see last few quarters, the management has been focusing and guiding analysts that it will be focusing more on unsecured loan portfolio. So it can get impacted. And lastly, Bank of Baroda, where again, I think the exposure of unsecured loans is moderately high at around 15.4%, but it stands out among the other PSU banks. So these are the four banks that I will be concerned about. And the analysis shows that the impact on capital ratios across various banks ranges between, say, 35 basis points on the lower side to as high as 98 basis points. RBL is the highest, around, say, 84 basis points. HDFC Bank, 72 basis points, and ICICI Bank, 64 basis points. So all in all, I think, it appears to be a grim day for the banks. And on the NBFC side, I think the impact is far higher because in case of NBFCs like SBI credit cards, 100% of the portfolio is sort of, will get impacted. And it's the loans that it sources from banks also are quite high. I think at around, say, not very high, it's around 12%. But there, I think the necessity for capital raise also will be there because the capital tier 1 ratio will get impacted by as high as 4.5%. From 21%, it will fall to around, say, 16.5%. The other NBFCs which remain vulnerable, in my opinion, are Bajaj Finance, where the adequacy tier 1 ratio will fall from 25 to 22%, and Chola Finance, where it will fall from 17% to 16.4%. The ones that will remain relatively unscathed, M&M Financial Services, all the HFCs, and also to an extent Shriram Finance. Poonawalla Finance, lastly, Poonawalla Finance also has a very large exposure, as also Aditya Birla Capital. So I think these are the names that we do worry about.
Ajay, thank you very much. That's fantastic analysis and I think really, really helpful to our viewers. You just clarifying, you said for Axis Bank, the exposure of total unsecured is 25%, as high as 25.
Yeah, 25.7% is the share of unsecured loans by Axis Bank. And it is, for ICICI Bank is 20.7%, for HDFC it is 23.2%.
Got it. So, I want to come back to NBFCs for a second, Ajay. Now, SBI card, the thing is the stock hasn't run up. It's not done anything this year. So, yes, it's a hit, but there's been so much of chatter and noise around this that perhaps that's not something that the market will be entirely puzzled with. But I want to talk more about a stock like Bajaj Finance. Yesterday, we had Bajaj Finance recover very smartly from the regulatory action that it received separately, for their digital lending products. Now comes this, fresh piece of news. How would you look at Bajaj Finance? Do you think this kind of a dip is a buying opportunity, or is it perhaps best to stay away for a bit?
I think I would tend to agree with your latter view. I would rather stay away and see the market sort of digesting the impact of the twin measures, the ones announced by RBI yesterday, which was quite out of the blue, and of course the one that's been announced today, which impacts to varying degrees almost all NBFCs, barring few. Like yesterday's measure, if I were to just look at Shruti, I think there are nearly 7 lakh, roughly 7 lakh digital EMI cards issued by Bajaj Finance on a quarterly basis. Now, that's a quite large number. And the overall disbursements, as per my analysis, because of the RBI ban, should lead to a decline of between 0.5 to 1.5% of the total disbursements. And although the management has said that they expect the ban to be lifted in 6 to 8 weeks due to remedial measures that they want to aggressively roll out, the expectation is that the PAT possibly could get impacted by between 4 to 5%, if say 20 to 25% of consumer durable loans would get impacted by this RBI ban. So I think today's last night's news, I think, comes on top of this pretty concerning news, because with company like Bajaj Finance, one rarely expects these kind of harsh measures from the regulator.